will bounce your checks ad nauseum, would allow you to get into some type of payment plan as a part of their bill of rights, if you will, for customers.
Mr. Faith, you have 30 seconds to respond.
Let me just quickly say something about this study he keeps talking about, the Morgan study. You know, the Federal Reserve put a big disclaimer on the cover to make sure nobody thought it was their study. It's a big disclaimer right on the cover of the report. But it just stands to reason that how in the world would a payday loan at $400 for 2 weeks help you avoid bankruptcy when you got to pay it back at 391% interest? Just think about that. Payday lending leads to bankruptcy. It doesn't help you avoid bankruptcy.
Let's take another question.
Thank you. Mr. Innis, I'd like to ask you a question, speaking on a local community level. You had mentioned a couple of times or alluded to this being a civil rights issue, but have you had the opportunity to actually spend time in communities where payday lenders have taken the places of banks, and this is just the only alternative that people have? And my second part to that is what, if any, types of programs would payday lenders offer to try to counsel people in order to get out of these cycles of debt of where they would need payday lending?
That's a very good question. The answer to your question is yes. I have spent time in communities here in Ohio and across the country. And the fact of the matter is, you're right, and I said it in my opening statement, you have more and more banks providing less and less services or shutting down in the community. You don't have the same type of community banks that might have existed one time early part of the last century that gave the personal touch and the personal contact with customers that these payday loan companies do. I've talked to so many consumers around this country, and they said to me quietly, because no one's particularly proud of taking a payday loan, but they are proud of having the ability to do so and the privacy to do so. That's what's so scurrilous about HB 545 and forcing people into a government-run database. We know how well the government is protecting the privacy of individual citizens, particularly in this state.
That wasn't the question. It was like
I can follow up a little later as well.
Let's actually, since that, even though that question was directed to Mr. Innis, I'd like to give Mr. Faith a minute to respond.
Well, the reality is, credit unions today in Ohio, in the North Carolina, if the North Carolina people are giving me money, I'd sure like to get the check. I mean, you know, the payday lenders are outspending us 60-1 on this campaign. If these big funders of ours, I just wish they'd FedEx the check. You know, we're running out of time. But credit unions in our state are offering, you know, alternative to payday loans. 40 of them, 120 branches throughout the state. Hard to compete with 1,600 payday lending branches, but still, it's a start. What's their interest rate? A once-a-year upfront fee, and then 17%, no matter how many loans you take out. Rita Haynes, with the Faith Credit Union here in Cleveland, who's been with us on this fight from the beginning, she offers those loans at even lower rates. And the interest goes into a savings fund so people can avoid emergencies in the future.
So I think there was a part of your question that had gone unanswered. Do you want to re-ask that?
Yes, I wanted to know what, if anything, are payday lenders willing to do in order to help counsel people and to help them get out of that need to get into these cycles?
Why don't you take 30 seconds?
I will. I know that the payday lenders that we've had contact with are supporting programs on college campuses, historically black colleges and institutions that promote financial literacy. I also know that in my meetings with the governor and with the head of the Senate and the Speaker of the Assembly, I asked them and pushed them and supported the fact that Ohio now is going to have, I believe, as a part of its core curriculum, financial literacy. That is ultimately going to be the solution to people getting in cycles of debt, be it regarding payday lending, or be it banks, or be it credit cards, or any other financial service.
Mr. Faith.
I'm in favor of independent credit counselors and nonprofit organizations doing the financial literacy education. It's very important. I'm not so sure I want payday lenders out there trying to, talk about financial literacy. I'm just a little worried about what kind of advice they give to people if they have a product that keeps people trapped in debt. But I am in favor of it. We fought for the legislation that Mr. Innis spoke about. On that, we agree. Having financial literacy education as part of our core curriculum in schools is a good idea, and it's long overdue.
Let's take another question.
This is for Mr. Innis. Earlier, there was kind of a dismissive comment about jobs. The jobs have been a part of this campaign. And could you talk a little bit about what the effect in the industry will be on the jobs in the industry if Issue 5 passes?
Well, if Issue 5 passes, it's very simple. 6,000 jobs will be lost. All those people I saw yesterday that were de facto financial counselors helping people prevent getting into a cycle of debt and paying back their loan and the principal and the fee through an extended payment plan will be out of a job. I've talked to payday lenders throughout this state who have said, Bill will talk about the fact that some payday lending companies have a variety of financial services, no question about it, but some of them don't. And some of them that do have a variety of financial services, some of the more profitable elements within their company is the payday lending element. And so if they're not allowed to do it, they'll be out of the state. So that's 6,000 jobs directly, and it's 4,000 indirect jobs from vendors and from other merchants that do business and that service the payday lending companies. 10,000 jobs in a fiscal crisis that this state and our country is in.
Mr. Faith, why don't you take a minute?
Well, here's the thing. You got to balance the jobs argument with the fact that the payday lenders trap 300,000 people in a cycle of debt. It's a net negative to our economy. And I think that's why our economic leaders and our political leaders, like the mayors, like the county commissioners, like all the former governors alive today from Ohio, and the current governor, and Lieutenant Governor Lee Fisher, who's the chief administrative point guy on building Ohio's economy, all say yes on Issue 5. And I don't doubt that some payday lending operations are going to close. Some have already closed. But do we really need 1,600 of them throughout our state? Don't they perpetuate their own demand by trapping people in a cycle of debt? And we're not saying they have to go out of business. We're saying offer a loan that's affordable, that's fair, and not predatory.
Let's take another question from the audience.
What are the choices that a payday borrower has if Issue 5 passes? What does a person do who needs a few $100?
Let's start with Mr. Faith. You have 1 minute.
If they don't go to payday lenders, they'll save money. All right? Any option is better than that. The reality is, in states like North Carolina, if you look at the Center for Community Capitalism in North Carolina, University of North Carolina, they looked at what happened after they capped payday loans in North Carolina. There's a similar study done in Washington, D.C. Finance companies picked up their business in small loans. Credit unions picked up business in small loans. But the volume of small loans went down dramatically. And there's other informal ways that people have adjusted, like borrow money from family and friends, like talk to their employer, delay purchases. And that's what they reported. These were people that went to payday lenders in the past, and people in similar circumstances. They were asked, what do they do to cope? There are other options. Ohio already has some. We could use more. Before payday lending emerged, there were 550 finance companies that offered small loans. There's almost none of them today because payday lenders dominate the market.
Thanks, Mr. Faith. We're talking about options for people if they don't have access to payday loans. And Mr. Innis.
Well, the options, quite simply, according to HB 545, is that you will get, number one, put into a government database if you take out a couple of payday loans.